Welcome everyone. It's the May market update from myself and Mike, and we've chosen a good time to do it. You know, we're on the 13th of May as we record this, and we've just had 2 or 3 days of activity in the market, a few down days, so things are getting interesting again. What's your initial take on what's been happening, Mike?
Hey Daniel, so I suppose it's still a question of real world and markets going in slightly different ways. I mean, the good news is that we are reopening in the UK, beginning to see that in other parts of Europe. People are being vaccinated, and that's really great news. And markets having risen aggressively when you know we had a lot of misery in the real world, they're now getting more choppy. And people in markets have this saying, you know, sell in May and go away. Come back St. Ledger's Day, which is in September, and that talks about seasonalities. And seasonalities, I guess, are the propensity of markets to behave in kind of the same pattern at different times in the year. You know, they rally in January and then you sell in May. And I'm a bit wary of it because some of these effects are not significant, and also I think it's a little bit lazy to think that you can just devise a strategy with respect to where we are on the calendar. Having said that, I think what looked like quite a robust marketplace is beginning to look a bit shaky. Tech stocks, small cap stocks in the States have come off. Bear in mind, we're only still 3 or 4% off all-time record highs in equity markets. So that puts it into perspective. And I think what's really happening is that, first of all, there is this adjustment going on with respect to inflation and bond yields, and then secondly, I think a lot of the stocks that are underperforming are those where you've seen most aggressive buying, and people are probably very, very long. But I think it's interesting, Daniel. We are getting into, and we referred to this on previous calls, this whole debate now on whether the Fed will continue to be very easy with monetary policy as we see inflation.
Yeah, that's right. I've seen a lot of people in the financial press actually trying to attribute the sell-off of the last few days due to the inflation numbers that have been coming out. So yesterday, for example, consumer prices, they were listed at having gone up 4.2% over the past 12 months. But everyone already expected that to happen, because if you think back a year, you had negative oil prices, you had the worst of the lockdown, those effects just hitting the economy. So anything that's listed on a year-over-year basis was automatically going to jump as a result of that base effect.
Yeah.
So I don't really think it's inflation right now. I think that those concerns are going to come, but I think we're a bit ahead of ourselves. I think, as you said, a lot of the stuff we're seeing getting hit the hardest in the market right now is the sort of stocks that did really well in 2020. And the best way of thinking about this is if you look at the ARK Innovation ETF, which got incredibly popular with investors at the end of last year because it had done really well and it had all of the stocks, the stay-at-home type stocks. So your Zoom, Spotify, those sort of things.
Yeah.
What we're seeing this year is the old world stocks, the ones that we've been liking, you know, the value plays, you know, energy. You know, it's anecdotal, but you know, just yesterday the S&P was off over 2%, but the energy sector was still up.
Yeah.
So it's it's more of a rotation story for me.
It is a rotation story, and I think bear in mind we did start to move into these sectors back, and I remember we made a move into energy end of last year, and we still have 8% in cash, so we have the option to deploy some capital if we get this sell-off. And it's, you know, I think it's just, you know, on a day-to-day basis, probably a bit more to come, but I think we can look to be opportunistic. And I suppose one question I have for you, given the tremendous interest we're seeing in cryptocurrencies. I mean, more and more banks, institutions are now having sort of held their noses about Bitcoin and crypto a year ago. They're now building platforms and they're trading it. And we've been following this for a while now. We're kind of, for the last few months, oscillating around the 50,000 level on Bitcoin. Where do you see this debate going? But I suppose the latest news is that Tesla will now not accept Bitcoin for car sales.
Yes, Tesla, which is off about 33% from its highs in February, has suddenly realised that they could do with appealing to ESG investors. Or at least that's my cynical take on the matter. So that Elon Musk has come out and said he's not selling the Bitcoins that he has for Tesla, but he's waiting until they can show that Bitcoin mining is using green energy, I think. In terms of going back to my cynical old man routine, the point about banks, which in the past have said things like, if I find any of my traders trading crypto, I'm going to sack them. That was at JP Morgan.
Yeah.
JP Morgan, I think it was, 2017.
Yeah.
Yeah, they've now set up desks to trade in crypto. So I think as soon as people figure out how to make money out of crypto, they suddenly become a lot more positive on it. And I think that's a trend that will continue over time. I think in terms of Bitcoin and its price level, you're right, over the last 2-3 months now, I think that's been really range bound, and we're probably at the bottom of that range now. I think a lot of the more interesting stories that people have been concentrating on is more of a blockchain and other crypto those sort of stories. So Ethereum, which is the second biggest and has all these smart contracts, and what do they call it, decentralized finance, those sort of projects are on that blockchain as well. That's been doing really well. There's a new project, a project that's been around for a few years but has publicly launched this week, called Dfinity. And it's one of those projects where, when I start reading about it and what they're trying to achieve, which is basically redesigning the whole internet, it sounds incredibly clever, and probably far too clever for my poor brain. So I think there's still lots of interesting things going on, and it'll continue to grow. Yeah. But it is super technical. So
So I suppose the lesson is that the whole infrastructure of the industry is growing and expanding. And I actually find many people are wonder aloud whether the rise of crypto will lead to a weaker dollar.
What's your take on that?
I'm not sure. I think dollar weakness at the moment is a function of the fact that the Fed balance sheet continues to expand. In some cases, faster than other balance sheets. The neighboring country of Canada is a good example. And also, we haven't seen real outright stress in markets yet, which would tend to help the dollar. So, people are watching this. I think what's also happening, to link this back to crypto, is that there is this arms race building for central bank digital currencies, where central banks will issue digital versions of their own currencies and sort of have direct relationships with companies and us as I suppose as households. And that shouldn't change much. It may make life more difficult for banks. It may mean that banks have got to focus more on certain areas. It will give central banks an awful lot more control and insight over what people do, and some people may not like that. And I think at the margin, people may prefer to have an account with the Fed than the People's Bank of China, or even better still, at the Bank of England or the ECB. So lots of changing complexities to come. I think for us, just to round up this call, keeping an eye on market volatility, keeping an eye on the rotation that you've mentioned, and we have the option to be opportunistic.
Yeah, well summed up. Thank you, Mike.
Okay, thanks.